Well, good morning, traders, and welcome to this week's Market Analysis Madness video. As we are getting started with today's session, I'm just going to ask the following that you just familiarize yourself with the risk disclaimer being displayed on your screen at the moment. This disclaimer basically just states that everything that I will be sharing with you during today's session is for informational purposes only, and at no point during this session will I be providing financial advice. Now that we have covered that, let's get going. Let's get started with today's session and let's discuss what is to come for this week ahead. So, from an economic point of view, we don't have the busiest week planned. This is unfortunately true for this week. And coming from such a busy week last week, ending with that big surprise that we got with our NFP report that came in much, much lower than expected and sending markets skyrocketing, we definitely have, well, quite a numerous amount of potential trading opportunities during this week, building from off that information that we received last week. So let's start off by just having a look at what is planned for this week to come. So kicking things off, let's quickly just have a look at our economic calendar, and then we'll move into some charts and then go from there on forward. So opening our economic calendar there for you, having a look here, starting off with today, we are expecting some Fed officials to speak and, well, obviously either acknowledge or add additional information with regards to the recent lack of progress with regards to inflation and what is to come from their monetary policy decision, especially after the recent interest rate decision that we now already had and now building towards our next one. So a little bit later today, we will see Fed official John Williams as well as Tom Birkin, who will be speaking today. And then tomorrow, we have a second Fed official speaking here at 6:30, which is Neil Kashkari. As well as on Friday, sticking to US news just for now, we will also see the release of the Michigan Consumer Sentiment Index, which obviously will give additional insight into inflation expectations and that economic outlook. That's basically everything from of the US for this week planned. Looking at an earnings perspective, there is a few earnings reports coming out this week. Two that I will personally be watching and keeping an eye on is the earnings report from Walt Disney, as well as the technologies company Akamai Technologies. So those are both large cap stocks that will be reporting their earnings during this upcoming week, and will definitely give additional information there with the general well-being of the economy as well. And this will obviously affect our index traders and stock traders in general for this coming week. Moving a little bit across the pond, we will also see a release from the Bank of England, and this is going to be on Thursday. So just looking at that on Thursday, just getting back to that. So around 1 o'clock, South African Standard Time, we will see the release of the Bank of England's interest rate decision. Now, recent economic data has presented a relatively mixed picture, and this obviously has created some price pressure within the markets going forward. However, markets' expectation for a rate cut has pushed a little bit back from June to now September. However, any downgrades to the medium-term inflation forecast could signal additional rate cuts for this year, and this will definitely impact movement within some of our British pairs. And one of the that we will be looking at during today's session is the GBP USD pair. We also finish off with our last, we have an additional interest rate decision. This is on Tuesday. So here you can see this will be at 6:30 in the morning, South African Standard Time. We will see the release of the Reserve Bank of Australia's interest rate decision as well. Now, this one I'm actually relatively secure in the option that it will remain as is because of the fact that we saw a little bit hotter than expected Q1 inflation data from them. There's still continued strength within their labor market, which means that it's quite unlikely to see any changes. However, traders will be closely monitoring any comments from Governor Michelle Bullock regarding the tightening bias. So from a Forex perspective, those are the primary ones to be looking out for on our economic calendar during the upcoming week. Now, moving into our charts for today, let me pop that on. There we go. So looking at our charts, starting off with Euro USD, as you can see here, we had this major push higher with regards to last week's NFP report. If you joined me live on Friday, you would have remembered that I obviously had that buy stop pending, as I was expecting a buy on Euro USD and, well, most of our US pairs. So I did have that buy stop pending. It was obviously triggered beautifully, went, hit, take profit, everything. And now we came back down and we kind of retested this resistance that we were looking at on Friday, which has now turned into that little bit of support. And for me now, looking at potential trigger points within this one here, is if we can break above this, I will call it 1.0775 level, that would be a relatively good indication for a push higher, potentially all the way up to this next primary resistance, which is sitting at 1.084645, round about that area. However, if this does get respected and this doesn't break, and we can break below and break back into this pattern, which would require a break and a close below, I would go as far as to say, 1.075 flat. This could lead to a decline and a retest of this support level here at the bottom, which is basically at 1.07. Now, again, we don't have that much US data that is being released during this week, and we will have to basically rely on those Fed officials who will be speaking during the week, and then obviously the report that we will be seeing later on Friday. This will obviously also be affecting gold. Now, we have seen gold push up quite a bit and is now trading above that 2,300 level again. However, still trading below this primary resistance level that we have, that is sitting around that, well, the top part of it sitting at 2,330. Now, if this level again gets respected, for me, I would just want to break below these previous points over here, which is around that 2,318 level. Now, if we can break below that, we could potentially see a retest of these lower levels here at 2,308, or even further down, maybe here at 2,290. However, as we are experiencing weakness within the dollar, there is definitely the potential possibility for a break of that resistance. And if we can get a break and a close above that 2,330 level, this could lead to an additional rally all the way back to these high points that we saw late April, which is sitting here at 2,350. So definitely worth watching, and especially again, because we have less economic data during this week, Traders, please be cautious with each one of your trades. Monitor each one carefully, do your analysis properly, and wait for that proper confirmation before entering into any new positions. Last US pair to just look at here is our USA 100 or NASDAQ 100. And you can see after Friday, we had this nice big bullish push and now it's trading within this support zone. Now, as you can see here, my EMAs, which by the way is the 21, 50, and 100 EMA that I use, is busy crossing. The 21 has now crossed both the 50 and the 100. The 50 looking to still cross that 100 as well, showing that change in direction, showing that change in general bias. So again, on this one as well, if we can get a close above, I would go a little bit higher on this one, just breaking above that 18,000 psychological level. If we can get a break above that level, there could be a potential rally all the way back to these previous high points again, that late April high points that we saw, which is sitting around that 18,380 level. Now, if this support resistance area gets respected and we can break back below these previous low points over here, which is sitting around that 17,820 level, that could lead to a short-term sell, primarily back down potentially for a retest on our dynamic support levels, which will be our EMAs, which is around that 17,650 level. And then we will reanalyze and wait to see what happens from there onwards, to see if there's any break of structure in any one of those, to see if there would be further decline. However, currently my bias is leaning more towards an additional rally based on that slight weakness within the dollar that is because of the data that we saw last week. Now, as we stated, the Bank of England is also looking at their interest rate decision that will be released on Thursday, and this will definitely create additional momentum within the market on our GBP USD pair as well. Now, just looking from an intraday perspective on this one, looking at slightly lower timeframes, I'm currently on the 30-minute time frame. We can see here that this morning we've already seen a little bit of a break. Now, also, traders, please take into consideration that today is a bank holiday within the UK. So there will be some subdued trading until we hit the US session a little bit later on. However, we have now broken through this resistance level that is sitting here at 1.257. If we can come back for a retest, this could lead to an additional buy, potentially up to this previous high point that we saw on Friday. Now, again, looking at what could potentially take place on Thursday when we see the release of the Bank of England's interest rate decision. If the Bank of England is still remaining and taking a bit of a hawkish approach, especially because we saw weakness within the dollar, we could see additional rallies, a break of this resistance level here at 1.26, and this could lead to a further rally, potentially up to this next resistance level, which is sitting around that 1.267 level. If, as I said, this level down here at 1.26, 1.261 actually gets broken. But again, if the Bank of England is taking a more hawkish approach than what we have seen, especially because of the fact that we saw weakness within the dollar based on the data that was released last week, this could lead to an additional rally within our GBP USD pair. Finally, finishing things off for today. Wait, we actually have two more pairs. Sorry. So looking here at oil real quick. Now, quite interesting to see here is, well, first of all, we saw oil have its steepest loss in 3 months last week. So that weekly loss that we saw in oil, or specifically crude oil last week, was the steepest loss that it took in a 1 week time period in over 3 months. This was mainly due to concerns over higher borrowing costs impacting economic growth, as well as the geopolitical risk premium that is currently taking place because of the negotiations, especially because of that ceasefire negotiation that took place or is taking place between Israel and Hamas. Now, if the ceasefire does get implemented, this will obviously reduce concerns over supply for crude oil, and this would lead to a further decline. There has also been speculation that the US government will start replenishing their strategic reserves if the price of WTI drops below $79 a barrel, which it now has. It is currently trading just below $79 a barrel at the moment. So definitely interesting to see what would happen there as well in the upcoming week. Now, looking here as well, you can see here that we are trading in this relatively tight range over here. So for me, I would literally just wait for a break to either side of that range. If we can break out above, we could potentially see a rally and a retest back up here at $80 a barrel, or we'll push down, break the support, break below that larger 50% Fibonacci level as well, which could see a further decline even lower, potentially down to that $76 a barrel level. And then finally, our last pair for today, which is our AUD USD pair. So that's our Australian dollar, US dollar. Now, again, as I stated, tomorrow morning, we will see the release of the Australian Reserve Bank's interest rate decision. Currently trading just below our resistance level here at 0.6643, roughly. Now, again, if that actually gets retested and respected, now for me, I would wait for a close below those slightly lower points. And if we can close below that, which is sitting around 0.6623, that could potentially lead to a retest of this lower support at around 0.658. However, as I stated, when we went through the economic calendar, my current bias on the interest rate decision for the Australian Reserve Bank is that they will most probably be relatively hawkish. And if this is true, we could actually break that resistance level, which we are currently trading under, and that could lead to an additional rally up to that next resistance, which is sitting around 0.669, even potentially pushing up to that psychological level at 0.67. Now, traders, that is it from me for today. I really do hope that you found benefit out of this session and out of the analysis provided for the week going forward. If you have any questions for me now, that can be either on any one of the analysis and charts that we looked at during the session, or maybe you just have a general trading question that is currently keeping you from being a profitable trader, please feel free to drop it for me in the comment section, and I will look at answering each and every one of those questions for you. Traders, I do hope that you have an absolutely fantastic week further. And as I stated, please apply proper analysis that will be both technical, fundamental, and even if you're using additional analysis types such as sentimental analysis, please apply your analysis properly. Wait for those proper entry points, those proper trigger points. Don't FOMO. Don't just jump into the market unnecessarily. Trade safe, protect your capital, and I'll see you again next week. Have a great trading week. Cheers.